Do you have a book that's losing you money? Are you able to find a niche, make a book, and do all the things the gurus say, but you're still losing money? Maybe your book is selling, you get good reviews, and your ads are working, but you're still not making the money you thought you would. Well, this is frustrating because we spend a lot of time researching keywords, producing a book, getting reviews, and doing all this stuff so we can make passive income and live a better life. It can feel like we're wasting our time working hard to sell books that just don't make money. So in this video, I'm going to show you how you can understand KDP economics so that you can know for sure if your existing book or a book idea that you have is a winner, a fixer-upper, or a complete waste of time that you need to walk away from. My name is Dorian. I've made over $1 million in royalties from my KDP account. Here's one of them. And that's over $3 million in book sales. And I've made every mistake you can think of, and I'm going to show you what I found to be true so that you can grow your KDP income and have the life that you want. So let's jump in. And if you start seeing my chin a lot, that's because I'm looking at a screen up here, and it's bigger and easier for me to see. So, all right. So let me show you what a profitable book looks like. It looks like this. This vertical is money, and the horizontal is time in months. So typically, for a good book, we start off with a little bit of a loss. See, a loss right there, and then we make a little money, a little more, and then eventually we are making enough money to recoup our investment, and then we start making enough money that it keeps growing over time, hopefully for years. So that's what a good book looks like. A fixer-upper looks like this. This is where it takes a long time to recoup your investment and then hopefully starts making a profit over time. And the thing that we need to fix up here is this point right here. This is your point at which you recoup your investment. So this is your break-even point. A loser looks like this, where you're in the hole, you make a little bit of money, but you're never going to make enough money to regain what you put into this book, including advertising expenses and all the other stuff. It kind of gives you the impression that you're going to make money because you do make a little bit of money, but just never enough. So that's a hard one. This is kind of a mirage, right? And then the last one is a money pit. So that's, you start off in the hole and then the hole just gets deeper and deeper. You just lose money. You keep losing money. And wow, that's just such a bad experience. So what we're going to learn how to do is there are 4 numbers that you need to know for your book. One is your book's profit margin. You need to know your book's conversion ratio. You need to know your book's average organic to paid sales ratio. So that means for every book that you sell through your advertising, how many sales do you get organically? And then your break-even point. So at what point do you recoup your investment and start making a profit? And the way that we can get to know these numbers is by using a spreadsheet. So here's a spreadsheet that I set up. And this shows the actual numbers from one of my real books. And it's a good book. In this spreadsheet, all of the blue squares, these are numbers that we need to fill in with our own numbers. And then the spreadsheet will do the rest of the work. So this is modeled on a real book, and for this book, I actually do sell it for $12.95, and I do make a profit of $5.01 every time this book sells. So Amazon gives this to me as a royalty. And where you can find these numbers is if you go into your KDP console and click Edit Book Pricing, then you can see a page that shows you the price that you set, of course, and then it'll show you the profit margin. Okay, so the next numbers that we need to get are related to advertising. So I want to know how many clicks does it take to get one sale? And that's going to give me the conversion rate. So we can find that here. So here's a screenshot of my advertising console showing my advertising for this book last month. And here we can find the number of clicks and then the number of orders. So we can also find it down here, the number of clicks and the number of orders. So that's 151 clicks for 30 orders. So that's a 5-to-1 ratio, right? So this takes me 5 clicks to get 1 order. If you're not good at math, all I did was I divided the number of clicks by the number of orders, and that turns out to be 5. So on Amazon, the average conversion rate is 10%. So that means that it would take 10 clicks to get 1 sale, to get 1 order. But for this book, it's a really good conversion rate. That's because my book is optimized. It's a good book, people like it, and the book description page is optimized, and I did everything right. Most of my books are in the high teens or low 20s. A few of them are in the low teens, and a few stinkers are under 10%, and I don't worry about those. Okay, so the next thing we need to fill in here is the number of books sold through ads. Now, we already got that number. It's right here. That's the number of orders, so I put 30 in there. And then we need to get the average cost per click. So this is how much money do I spend on average for somebody to click on my ad. And in this case, for this book, it's 59 cents. So I put that there. The last number we need is the total number of books sold. So that's not from advertising, that's from everything. That's from organic and advertising. And I get that by looking at my orders. So if you go to your console and you click on orders, and so this is for last month, just like my advertising, so it's the same month, same book, and I got 96 orders. So let's put that in here. And these numbers look pretty good. Based on this, because it takes 5 clicks to get a sale, 1 sale cost me $2.95 in advertising. So that means 5 clicks times 59 cents per click. That makes $2.95. And since my margin is, it's okay, $5, then the profit that I make every time a book is sold through sales is $2.06. And then on top of that, I get an average of 2.2 books sold organically for every book that I sell through an ad. And I get that because of these numbers right here. This shows me that for every 30 books that I sell through ads, I sell 66 books through organic sales. And here's the multiple. So this is the number that I need to know. Now this number can be low, like 1, or it can be high, like 5, or 10, or something like that. It really depends on the niche. It depends on the book, the keywords. For this particular book, which is a good book, it's just over 2. And I found that this number is reasonably consistent. It's been like that for about the past year, not just in the past month. So it's around there. But it's good. The book works. I'd like this number to be higher, but it's not for this book. And, that's all right. Okay, the next thing we need to look at is how much did I pay to make this book? So that's the book production costs. I don't remember exactly, but let's just say it was $1,000. So that includes writing, the book cover, the A+ content, having lunch with a friend who knows about this subject. Everything that I spent that I never would have spent if it wasn't for this book, I put in here. This is how much I'm invested into this book. And I also need to know how much I spent in my advertising for the first 2 months. Let's just say I spent $100 in advertising for the first 2 months. And then from the 3rd month on, I started spending $88. And then let's just say for analysis that I spend $88 per month from here on out. The reason I'm using $88 is because here, this is what I spent last month. And I want to have numbers that are backed up by actual case study so that you get, real numbers so that you can understand this with a real book. Based on these numbers, if I launch this book today, then I would expect that by month 4 that I would recoup all of my investments. So my initial cash would be $1,288. I need to explain that. So I need to recoup the initial production costs plus about 3 months of advertising. The reason I need to do that is because even if I sell a lot of books in my first month, Amazon's not going to pay me for a couple months after that. So whatever I spend for the first 3 months, I'm going to have to recoup that. I have to carry this. So that's what I'm including here as my initial cash that I put into this book. If I do that, then based on these numbers, real numbers, then within 4 months, I will break even. And that's this little point right here where I break even. And it's really nice to see that. So to me, that's the mark of a good book. If I project this out for 3 years, then I should make, $12,000 in profit from this book. The reality is that I've had this book out for 3 years already, and I've made $38,000 from this book, minus advertising, so let's say $36,000. So again, the reality is weird, right? It's not a straight line, but the numbers look good right now, and in the short term, they look really good. So this is a pretty good model of what a successful book looks like. Now, let's start playing with these numbers, and let's find out which numbers are the most important ones that have the biggest effect on the trend of your book, or, like where your break even would be and what your potential profit could be from this book. So the first thing that we can look at is the price. Well, the price, yeah, we can increase the price, and that will increase our profit margin. But sometimes the market doesn't allow that. So we might be at our maximum price. But let's just say that we can increase the price to whatever, $14.95, and that increases our profit margin to $5.24. I don't know if it does. It's just a guess, but let's just have a look at that. So it didn't really change our break-even point very much, but it did give us a little more upside. And that's cool. That's good. I'm going to set it back to where it was. And let's say that the profit margin was $1 lower, so $4. Okay, that pushed us out a little bit in terms of our break-even point, and it reduced the potential profit for the book. But again, not a whole heck of a lot. Let's bring the margin down to $2. Now it starts getting to be dangerous. So I call this a fixer-upper, meaning that you've got to do something to fix this so that you're not as negative with it, so that your cash flow isn't negative for a whole year, or you have the risk of other competitors coming in and then never making a profit. So this is a terrible margin, and even with a good conversion rate, it's pretty bad, and very quickly it exposes us to the risk of not making any money. Let's look at this number here, the clicks to get one sale. Like I said earlier, the average on Amazon is 10 clicks to get one sale. That's a 10% conversion rate. So even with a good profit margin and a relatively low cost per click and an average sales multiple, if we have an average conversion rate, it's going to take a while to recoup. It's going to take 9 months. You can see over here. And that's not so good. And what if the conversion rate is worse? What if it's 20 clicks to get one sale? So already this book becomes a stinker. It's horrible. And that's because the conversion rate is so bad. So obviously we want to make sure that the conversion rate is as good as possible. If you have a low conversion rate, under 10%, so that means that it takes more than 10 clicks to get a sale, then you're not doing good. You need to optimize your book page. So that's your description, your copywriting, your A+, your reviews, your UGC, which is user-generated content. That's videos and pictures that your customers upload, and your about author and all that kind of stuff. You need to improve that so that people feel more confident to buy your book. Your book cover, which is primarily what gets people to click, that can also affect your conversion rate, because when you're looking at a tiny thumbnail, you may click it because it looks interesting, but when you see it larger, if you can tell that it doesn't look so good, then that can really affect your conversion rate. So all that stuff works together to bring your conversion rate higher or lower. And so that's part of the optimization. Now let's look at another thing that we can very easily affect, and that's the average cost per click in your advertising. So this is determined by the keyword and the niche that you're in. So obviously the higher you pay per click, let's say $1, then the more risky your book becomes, and it takes longer to recoup and break even. If you're paying $1 per click, you need to have a much better conversion rate. Otherwise, you're going to lose your shirt. And oftentimes, you don't really have much of a choice. Like I said earlier, it depends on the niche. Some niches you can spend 15 cents per click. And if you have a good conversion rate and all that other stuff, then that can be a real winner. So I hope you get a sense now of the different levers we can push on to influence how the book performs. I'm going to mark this thing green because that's a real moneymaker, green for money. The conversion rate, so the clicks to get a sale, that's something that you can affect. The book margin, you can change that as well. You can optimize that. One way is by increasing the price if you can. The other way is by reducing the number of pages. So a lot of people don't think about that. But if your book has a certain number of pages and a few of those pages have either redundant or unimportant information, maybe you can consolidate that into one page. So if you can reduce the book pages by 10 pages, then I don't recall the exact number per page, but you might be able to increase by a penny per page or something like that. So that makes a difference, as you can see here over the long run. It's not a big difference, but it could be just enough to help you be able to afford a higher cost per click or something like that. Obviously, if you're able to reduce by 20 pages, then that starts getting significant. Or if you plan your book so that there aren't too many pages when you start out with, then that helps you with your profit margin. Another way you can do this is by choosing a larger size for your book size. If it's 8.5 by 11, which I don't really use a whole lot, but if it's that big, then you can fit more information on each page. And so the number of pages in your book can be shorter, it can be less than if you have a book that's 6 by 9. Right, so another place that you can influence your book's performance is by spending less money to make your book. Let's say that we spent $300 to make this book. If that's the case, with everything else being equal, then I would have recouped my money really quickly by the second month. That's really great. I've seen that happen. What other levers can we push here? Well, advertising is a funny one, because if we put a different number in here in this spreadsheet, let's get really aggressive. Let's push this to the limits. Okay, so let's say we spend $1,000 per month on advertising. And if these numbers stay the same, the clicks to get a sale, the cost per click, and all that kind of stuff, then we can start making some bank with this book. Look at that. This profit jumped up to $149,000 from $12,000. And that's including the cost of advertising. So this spreadsheet automatically includes the cost of advertising. So this is actual profit, not just, gross profit. The trick here is that when you start pushing your advertising, then, whether you're on Amazon or Facebook or just about any other platform, it's hard to scale. So could we go up to $1,000 per month in advertising? Yeah, we certainly could. But probably what's going to happen is that your cost per click is going to get higher. It'll be less efficient. So immediately, you see what that did there? It reduced it by half, right? The other thing that happens is that your conversion rate may change as well, because more advertising on more keywords, those keywords may not be so well matched. They may not be so relevant. And people may also get sick of looking at your book. So this can come down as well, meaning that if you had a 20% conversion rate, it may come down to 10% or something like that. But even so, it's looking interesting. And the advantage to spending more with advertising, if you can keep these numbers in line, if you can control your numbers, and if you're able to spend more on advertising, then your ROAS, your return on advertising spend, it will come down, but you're still going to make more money. So if you can put $1 into a machine and then get back $2, well, that's good. You know, how many times will you do that? I'll do that all day. So if you can get that to work here, and for every dollar you put in, you're still getting back $2 or $3, is it worth it? Yeah, I'd say yeah. So this is something to look at and see if you can accelerate, and you'll know pretty quickly. And if you keep an eye on your advertising, you can control this. So as long as you keep an eye on your numbers, you can push your advertising, try to get a little more aggressive, and like I said, just keep an eye on it. You always want to look at your advertising to make sure that you're not wasting money. And you want to make sure that you're still getting the same number of books organically as you were before. And also keep an eye on your cost per click. If you do that, then you can continue to push your advertising, and you'll know pretty quickly if you've gone too far, if you need to pull back. There's a point there, there's a sweet spot that you can get to. So based on what we've looked at, we know that the profit margin is one of the levers that you can push on. The number of clicks to get one sale, that's your conversion rate, you can push on that. The average cost per click, let's make that green also, because that's another lever that you can push on. And then your book production costs and then your advertising, those are things that you can push on as well. Now, if you have an idea for a book, you can still use a spreadsheet like this to gauge whether it's a good niche to be in. And so right away, you can figure out what's your profit margin going to be, right? You don't have to have a book in order to know this. You can do this right in Amazon. And you can assume that you'll be getting a 10% conversion rate. So always start there. Don't assume you can get a 20%. That's something that you'll need to work on to get. But if you start here, which is the average, that's a good number to start from. And then for the average cost per click, you can go into your advertising console and check out the keywords that you want to advertise on, and you'll be able to see what Amazon recommends as a cost per click. You'll get a good sense of this pretty quickly. And then in terms of organic sales multiple, you can just put 2 in there and then see what it looks like with just 2. If you're lucky, it'll be higher in reality. And if it's a difficult niche to be in, then it'll probably be closer to 1. I've seen niches like that, but they can still be profitable, just it's not quite as profitable. So these are the levers you can push on. Now, let's look at a case I'm going to make against low content. I know there's a lot of you that like low content. I've never understood it. So maybe I'm not the guy to really talk about this, but let me just show you why I don't like it. So let's say that you're doing a coloring book and you sell it for $7.99. Your profit margin is $1.12. Your clicks to get one sale is 10. And then your cost to advertise is 25 cents. And your book production costs are going to be, let's say, $200. So that looks okay, but yeah, I mean, it's going to take a few months. It's going to take 10 months to recoup investment. That's because the profit margin is kind of low. Let's say it's a little higher than that, $1.40. That's looking better. But my experience in the coloring books niche is that the cost per click was actually higher than 25 cents. Like the books that I tried to advertise, I think it was closer to 40 cents. And the other thing that happened is that my conversion rate, there was a lot of competition, and my conversion rate, I think, was not quite as good as 10%. But just looking at this is so sensitive to your cost per click. If you've got 10 cents per click, you're doing good. If you've got 50 cents per click, you're doing really badly. And That's why I stay away from low content, because the margins are so low that it's super sensitive to the cost per click. Now, the last thing I want to talk about here is ACOS. Notice I haven't talked about that at all. It's important. I do look at the ACOS. The one thing I want to say about ACOS is that it's a good gauge on what your break-even point is for not here, not on this thing, but your break-even for every book sale that you make through advertising. So in this case, the ACOS, the break-even ACOS would be, let's try this. Okay. In this case, the break-even ACOS would be 38%. And that would happen if my cost per click was $1. The reason that I know it's the break-even is because my profit would be basically nothing if my ACOS for this book under these conditions was 38%. So if it takes 5 clicks to get one sale and every cost per click is $1, that means I'm spending $5 to make $5.01. Okay, so that's what the ACOS shows. And that's based on the book price and the cost to sell the book. This is the important thing to understand. Notice how I said it's based on the book price, not on the book margin. Amazon does not calculate your profit margin for you. It just looks at the book price. So some people are comfortable with ACOS of, say, 100%, and then they think that an ACOS of 90% means that you're still making a profit. You're not at all. The break-even ACOS for this book is 38%. If it's higher than that, then I'm losing money on my ads, but I could be making it on organic sales. And every book is a little different. So your break-even ACOS could be 25%, it could be 45%. It really depends on the book price, and the margin for your book. So there you have it. That's how to understand the numbers. This is how to get a good gauge of whether a new book idea that you have can be a good one, a profitable one to go into. This is how you can tell if you have a fixer-upper, if you have a terrible clicks to sales ratio, then you can fix it, and then that'll change your economics. And you can also do a little bit of work to fix your profit margin and a little bit of work to fix your cost per click. And if you have a profitable book, you can push on the accelerator with your advertising up to a point. So those are the things to do to optimize, to fix your book, to make more money. If you found it helpful, let me know. If you have any questions, put them down in the comments below. I try to answer every question that I can. If you have a book or a KDP business that's not doing good and you need some help, reach out to me. I can show you how to fix it. And if you'd like a copy of the spreadsheet, then come to my website and simply reply to one of my emails and say, hey, send me the spreadsheet, and I'll send it to you. So there you go. I hope this was useful. Watch my other videos. There's a lot of really good content, and I'll catch you later.